Here is the truth about buying Bitcoin in 2023 explained simply using 9 charts. This is some genius level shit right here, so listen up. First, let's start this conversation with a good old shot of hopium to the arm, baby. This chart here shows the accumulation periods before the Bitcoin halving. Now this is starting from the market bottom up until the Bitcoin halving. Now the last 3 have lasted 364, 539, and 518 days respectively. Now if the bottom for Bitcoin was indeed November 9th when FTX collapsed, then it gives us 532 days until the next halving, which is very much in line with historical trends. Then what comes next is the most interesting part. Post-halving, Bitcoin always puts in massive rallies, which take anywhere from 12 to 18 months to really top out from the time the halving happens. So that puts us at a new all-time high peak price being set maybe mid-2025. If history rhymes again, then in 18 to 24 months, we're all going to be getting hilariously rich again. Cool. Then we have the long term here as well. Higher time frame picture for Bitcoin. And it shows that Bitcoin is actually broken out of the long-term downtrend that it has been in, something that in the past has indicated the start of a new cycle, and that a new rally was forming up. Volatility is still king, of course, in this situation, and the effect is not instant, and it takes some time to really build up moving into the Bitcoin halving. And secondly, it shows that we are getting closer and closer by the day to a MACD bull cross. Again, in spite of all the volatility that we've had recently. Now, in previous cycles, a monthly MACD bull cross has been a big signal that a new cycle was underway and that a multi-100% gain was coming for Bitcoin. That has not confirmed yet. We're watching for it, but it will be a big signal when it does happen. Next, let's talk about volume. The current volume profile really feels like a bear market sad story. Trading volumes across major exchanges have not been this low in 32 months, almost 3 damn years, gone full cycle. The last time volume was this low was all the way back in October 2020. Yikes, right before the big rally kicked off, of course. We've essentially just done a giant volume loop, right? All the tourists are gone. And keep in mind that we're at such low volumes and that we're still going to have to absorb the rest of the FBI Bitcoin sales, the Mt. Gox Bitcoin sales coming later this year, both of which can bring in significant sell pressure, or at least fear of sell pressure, which sometimes the emotional response is worse than the actual event itself. Now, before we look at macro conditions and sentiment and some other key factors I want you to keep an eye on, I wanted to let you know about Wealth Mastery. This is my weekly cryptocurrency newsletter. Now, my team and I spend about 40 hours every single week putting together this absolutely amazing newsletter, just jam-packed full of the alpha that you need. It only takes about 10 minutes to read. We talk about altcoins, airdrops, charts, DeFi, the news, and much more, of course, the news. Join our over 75,000 weekly readers and sign up for free using the link down below. Our readers love it, and I know you will too. Now let's talk about liquidity. The low volume is leading many to say that there's just a liquidity crisis for Bitcoin. There will be no new buyers. How can we ever get to new highs? There's no liquidity in this market. How can we see that massive rally for Bitcoin? There's just not enough money to go around in these current economic conditions. Everyone's too scared of a recession to ape into Bitcoin or other assets. Well, I disagree. Let's just keep in mind that both Apple and Nvidia have just hit new all-time highs this year with all that macro fear still going on. They rallied crazy. Nvidia rallied over $300 billion in just one day, which is bigger than the market cap of Ethereum. And Apple rallied by over $700 billion this year, bigger than the market cap of Bitcoin at $500 billion and nearing the size of the entire cryptocurrency market, if we're honest about it. The money is out there. It's definitely out there. It's just a question of when, not if, it flows to Bitcoin and the rest of the cryptocurrency market. And even a very crypto-specific context, the stablecoin supply actually remains really, really strong. Sure, we're down from the peak of $180 billion that came just days before the Terra Luna UST implosion in 2022, but we're only down to $120 billion right now, and that's not bad. Just take a moment to understand that this money has increased so dramatically since the last cycle. USDT, for comparison, was only around $2 billion total market cap around this time in 2019. And that has at about $80 billion today. That's a 40x increase. Much more if we count for all the stable coins, meaning there's 40 times more money in the market today than there was in the last bear market. Crazy, right? Now let's discuss the sentiment. With the recent wave of SEC crackdowns, the sentiment across the cryptocurrency market has obviously been very bad recently. And the media, of course, has been quick to hop on the bandwagon of kicking Bitcoin when it's down. They love it. They love it. Trashing crypto as they always do. Vox, for example, posting this headline the other day. Now might be a good time to consider quitting crypto. Thanks, Vox. Thanks, appreciate it. All of which is, of course, typical bear market sentiment. And to build off of that, Google searches. Let's talk about this. This is always a pretty good sentiment gauge of what people are actually interested in. Well, they're not interested in crypto right now. That's what. It's super low, super damn low at the moment. This, along with prices, has basically been on a steady decline for 18 months now. The hype is gone. But hype and price and sentiment, they're so closely interwoven. They work together. One must absolutely pay attention to this relationship. And right now, what that is telling us, kind of what we already know, the markets are boring. Nobody's interested in crypto right now. But here's the truth. That boredom is opportunity for anybody still out here watching this video. Accumulation time is here. I've been buying. Have you been? And if so, let me know what you've been buying down below. Now let's talk about the simple reality. It's a bear market, man. Things are slow, things are boring, interspersed by moments of panic and despair. It's actually the norm for crypto. A lot of people don't realize that. The bull market is the mirage, the fleeting moments of joy that last maybe 6 months or a year. Most of the market, the majority of time, 75% of the time we spend in markets, boring, painful, sideways accumulation, moments of terror. One thing has proven true with the crypto markets, though, is that buying Bitcoin during the bear markets, during these boring periods, has proven to be a solid long-term decision every single time previously. I think history will repeat personally. Despite all the pain and suffering of the last year, literally anyone who bought Bitcoin before the last Bitcoin halving has always been in profit. These buyers from the last bear market remain on average a few 100% in profit. Buy, stack, hold, repeat. It's pretty simple. Now is the time, right? Now let's talk about macro danger, like stranger danger, but more dangerous potentially, depending. Anyway, there are so many charts to look at out here, and look, I can make an hour-long video just going over the different charts showing all that macro fear, macro's crap, a recession could be coming soon, everything's bad, 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 bad. But let's take a look at this one. This shows that bank lending standards are being tightened at a very fast rate. The last 4 times this happened was in 1990, 2000, 2008, and 2020. Every one of those times resulted in basically not good things coming shortly thereafterwards. So, yikes. Now let's discuss the relationship between a recession and our magic internet, money. You see, we're in a weird place right now because the stock markets, they have been rallying pretty hard. In fact, the S&P 500 is right now officially back into a bull market, which is funny because crypto is still so savaged and destroyed, right? But that's what's happening. However, stock markets historically do not bottom before a recession is announced. A recession has not been announced. So if a recession is still coming, that would indicate that stocks still have lower to go. And if stocks are going to go lower, yo, watch out, man. Watch out below for our Bitcoin and crypto, man, because it's gonna be bad. One caveat to this, though, is that with all the money printing and the White House essentially just changing the definition of what a recession is, this time may actually be different because they have manipulated things so hard that it may just not be the same. In fact, the USA, if we go by a formal definition, already had its recession last year. Done and dusted, moved beyond it, right? Plus, the Democrats want to make sure that the economy is, doing okie dokie for the elections next year. Still, though, this is something worth noting. It's worth something that's worth keeping in mind, that if we do get this recession, stocks are probably going to bottom afterwards. Historically has been true. Well, it doesn't necessarily mean it's going to be true in the future. My closing thoughts here, and perhaps the most important part of this video, last cycle, buying top coins during the depths of the bear market returned anywhere from 10x returns. Bitcoin, for example, did a 10x return from bottom to top, right? 20x for Ethereum, 50 or 100x like Cardano or Matic did. And I'm not talking about buying the Pico bottom. I'm talking about buying during the accumulation ranges, right? A lot of these coins spend a lot of time just in a range moving sideways. ETH, for example, spent like a year bouncing around like $2,000. Bitcoin around $6,000. Look, it's not rocket science. Yet the vast majority of investors will not buy low. They won't buy here, and they won't sell it high. They're going to buy high, and then they're going to sell low in the next bear market. Don't be a victim of the market. You have the chance right now. Be smart. Invest smart. Okay, that's it. Subscribe now. I'll see you next time.